Hey everyone, welcome to this week's episode of Table Talk with Mike. Today I thought I'd talk about a question that I often get asked is what's the difference between a credit union and a bank? And um, I can really only answer that based on my own personal experience. With over 30 years in the banking industry, I've worked for three of the big banks, three different credit unions, a provincial bank, and as well as about 8 years as self-employed as a mortgage broker. So my experience in the banking world is fairly extensive. I've had a lot of different experiences, and that's spread across three different provinces as well. So when it comes right down to it, to me, in my eyes, in my experience, from a product and service standpoint, there really isn't a whole lot that differentiates one bank, one credit union from another. It's a very competitive market, so you're not going to find big major differences between the products and services, even the pricing, the interest rates that you can get from one institution to another. So really, what does it boil down to then? What is the difference? In my eyes, in my experience, it's been the internal culture of the institution. Um, Again, solely based on my own experience, working with the big banks, the culture there is very much sell, sell, sell. Um, they have shareholders. They demand, a rising stock price, a strong dividend. They want to get those quarterly earnings where they're supposed to be, and in order to do that, those within the bank, you got to push profits. You got to sell product. Now, that's not to say there aren't great people that I've worked with at the bank. There absolutely are, but it is a culture of sell, sell, sell. And I've run across it a couple of different times where that has led to um, some questionable moral things that some people have done in order to hit their targets, make their numbers, and sell enough product or service to get their bonus at the end of the year. For me, my philosophy, as I shared, I believe in one of my earlier videos, is very much to do the best thing for my client. Sometimes that doesn't necessarily mean it's the best thing for me. It's not something that's going to get me closer to my bonus at the end of the year, but it is the right thing for the client. And to me, that's most important because I've been on the other side of the table where I had my own business. I was self-employed, and I know what it's like, and I knew what my expectations were as a client, what I expected from my banker. And that's not just in banking, that's anywhere that I might be a client. I have an expectation of how I want to be treated, and that's with respect and um, just you get what you give, right? What goes around comes around. All of those sayings. Um, so for me, it's about doing the right thing for the client. If I do the right thing for the client, I know somewhere along the way it's going to come back to me and it's going to help me get to where I want to go. That may not be with that particular client itself, but maybe because I was honest with them and directed them in a way that I couldn't help them myself, but I could find someone who could, um, someone outside of where I worked, or when I was self-employed, a different way to go than what I could offer. Then in my experience, that makes clients happy. They enjoy that, and they'll tell people about that, and then referrals will come back to me somewhere else down the road. So for me, that's always been my philosophy. My experience working with credit unions, and especially with service where I am right now, that's the culture within a credit union. It's very much we're a member-driven organization. Our members own the credit union. We don't have shareholders. So while yes, we absolutely want to build, make a profit because that's how we pay the bills, we also want to do the best thing for our members. And at service, that means helping them achieve um, the greatest level of financial fitness that we can help them get to. And so it's always about doing the right thing for the client, doing the right thing for our members at a credit union. And that really, to me, is what boils down to the differences between a bank and a credit union. Now, again, not saying that the banks are bad or that everyone who works at a bank is terrible. That's not the case at all. I'm sure not everyone who works at service has my philosophy either. But in general speaking, general terms, that's been my experience. That the culture is different within the organization, and that's to me what really boils down to the difference between a bank and a credit union. So really, for you, if you're looking at changing banks or looking for a new financial advisor to work with, whether that be in retail banking or with me on the commercial banking side in financing, you want to find someone that you can work with, that you feel comfortable with, that someone that is going to take their time to get to know you, get to know your business, ask questions, um, find out what your needs are, what your goals are, so that they can help you from whatever aspect they can navigate to get to that goal and reach your level of success, however you might define that. So if you've got someone at a bank that you're working with, great, no problem. But again, answering that question, what's the difference between a credit union and a bank? To me, it boils down to the internal culture and how the membership or the client base is viewed in general terms, and that's kind of how it looks for me, and that's been, again, based on my own experience. So hopefully that helps. If you have any questions, certainly leave me a message down below or send me a direct message, and I'd be happy to answer any questions you may have or provide any more information that you might need. Thanks for listening.